Cloud. All right, so what we're currently in terms of like our tax code is tied to the TCJA. That's the Tax Cuts and Jobs Act of 2017. It introduced several changes which are set to expire at the end of 2025. So the end of next year, after we finish that tax year, a lot of things that we're using and enjoying are set to expire. And I'll go into detail for each. One is the individual tax rates, the standard deduction, personal exemptions, child tax credit. If you're in a state that has state taxes, state and local tax deduction caps, qualified business income deduction, and a state tax exemption. So just to go into this a little bit more, essentially, once these expire, if they're not extended by Congress, it will potentially cause a tax liability, right? An increase in tax liability for many tax payers. All right, so just to go in detail for the different parts that I just mentioned, there's the individual tax rates. We are currently using the TCJA's proposed rates and thresholds and tax brackets. And based on how they're set up, if they are set to expire, we're going to be seeing higher tax rates, right? And we're going to go into higher tax brackets. So a lot of persons would be affected by that. And just to kind of help you to understand, what we currently have is, let's say, for example, you earn $30,000, right? The United States has, or the IRS, federal tax, has a progressive tax rate. So a certain percentage is taxed at 10%, and then it continues to gradually go up. So not all your income is going to fall into a specific tax bracket. So it's a gradual thing. And that will change if the Congress does not extend the TCJA or propose something that is similar. Another thing is the standard deduction. If you look at your tax return on your 1040, and that is the first part of your 1040, line 13, let me just double check that it's line 13. On your 1040 form, there's an amount that's called a standard deduction, line 12 actually, where you can choose to itemize or use a standard deduction. And what happens is that amount is typically not taxed, right? So if you make under that amount and it's W-2 income or Social Security income, typically you don't have to file a tax return. Granted, there are no additional types of income. And that amount it's proposed with the TCJA. That's currently what we're under. So I just want you to understand what we're working with and how the proposed policies are going to affect these, right? The other thing is a child tax credit. It's currently $2,000 per qualifying child. It's been increased through the Tax Cut and Jobs Act. In addition to that, the phase out, meaning persons with somewhat of higher income are able to still qualify for it through the TCJA. If that does not get extended, then you'll see lower qualifications for the tax credit and lower amounts that are credited to your taxes to lower your liability. And then another thing I'd like to mention is the state and local taxes. So if you're familiar with standard deduction, you know that there's the option to itemize. So you can choose the amount that the government provides us with, which depending on whether you're married, filing jointly, single, you can choose that amount that's given, and that's usually adjusted for inflation. The alternative is if you have actual out-of-pocket expenses and they qualify, and those include state and local taxes, you're able to use that deduction instead of the standard deduction, granted that that's more. However, through the TCJA, they have a limit on how much that it is that you can deduct. So it's up to $10,000 if you're in a state like New York, New Jersey, Phoenix. It's up to $10,000 of actual state and local taxes that you can deduct, in addition to other taxes that will get you that itemized deduction. And then another notable mention is if you are self-employed, there's a tax called self-employment tax that you are assessed, right? In addition to that, the TCJA provided a qualified business income deduction, and it allows for up to 20% of your business income to be deducted. So you get a 20% deduction on your business income where you don't have to pay taxes on that. So let's say you made 60,000, whatever you paid in taxes for that 60,000, if that income is going to stay the same for 2026 and that they do not extend the Tax Cut and Jobs Act, then you're going to be paying more in taxes, specifically because you're not going to get that 20% credit. Another notable mention is the estate tax exemption. The federal tax has a higher threshold on how much of your estate you can pass to your, your beneficiaries without it being taxed. And that's that. If that's not extended, if the TCJ is not extended, then of course we're going to be looking at paying more in taxes if you're passing wealth on to family members. All right. So is everybody still with me? I know I said a lot. Any questions? All right, so I will move forward since you're both quiet. All right, let me see. I will move forward here and I'm going to speak about both administrations and what they're proposing and how it may affect you. I'm going to preface this by saying first that with both administrations, these are proposed. So unless Congress votes and passes it, then it's just still a proposal, right? And chances are it's very unlikely that all of these are going to be passed because it still has to pass through Congress, right? So in terms of individual taxation, we just went over that the tax brackets are going to change a little bit, right? And that's going to lead to a higher tax liability if the TCJA does not extend. And the Trump administration for individual taxation has proposed to eliminate taxes on overtime. So, if you work over 40 hours, whatever is over that amount usually is taxed. And most times that will probably take you into a higher tax bracket, right? So the Trump administration is proposing no taxes on overtime, no taxes on tip, and no taxes on Social Security benefits, right? There are no proposed changes related to that from the Harris administration. But I will say that typically Social Security benefits are not taxed unless, let's say you have Social Security income and income from a W-2, and it goes over a certain amount or different factors. So just to put that out there. They both have proposed changes for corporate taxes. And with the corporate taxes, corporate tax rate, if you register, it's just like you register an LLC at the state level, you can register a corporation, right? So typically, the federal government has a flat rate tax of 21% for corporations, right? So it's just a flat 21% regardless of how much they make. The Harris administration is proposing an increase in that tax rate. So instead of it being 21%, their administration is proposing a 7% increase to increase that corporate tax rate to 28%, while the Trump administration is proposing a 1% decrease across the board. So if you register a corporation right now, it's 21%. And the Trump administration is suggesting it be lower to 20%. The Harris administration is suggesting it be increased to 28%. In addition to that, there is also a proposal from the Trump administration for all the corporations that have moved their production outside of the United States for financial reasons, tax reasons, that they get an incentive of instead of paying just a 1%, having a 1% decrease, he's proposing a 6% decrease for them. So they'd be paying instead of 21%, 15%, right? So that they can move production back to the United States. Another more general, widespread, impactful proposal for both administration is a child tax credit. The Trump administration is proposing that it stays as is, because remember, it's set to sunset after the 2025 tax year. So it's set to expire. The Trump administration is proposing a permanent extension of where it's currently at, which is up to $2,000 per qualifying child. While the Harris administration proposes restoring the 2021 expanded tax credit amount. So if you remember in 2021, persons were getting up to $3,600 per child, right? That's what the Harris administration is proposing, that we go back to that 2021 benefit. In addition to that, that administration, that's the Harris administration, for your child, the child's first year of life, the administration is proposing instead of $3,600, that first year of life for your child, they get $6,000. So that is the proposal there. An additional 4,000 for the first year of life and to where it's at right now, and then an additional $1,600 for ages 2 through 17 for the Harris administration. And then the Trump administration is just saying, let it stay where it's at, no changes. And then we spoke about the SALT, state and local taxes, if you wish to itemize. If that's not extended, it's not the end of the world because it allows for persons to um, deduct more, right? More state and local taxes if the Tax Cut and Jobs Act does not extend. There are no proposed changes for the Harris administration, while with the Trump administration, what he's proposing is that it be lifted, right? So let's say if Congress decides they're gonna extend it out, then they're gonna continue with the 10,000, right? But the Trump administration is proposing that it be lifted, so that $10,000 cap be lifted, and there be no cap at what you can deduct in terms of local and state taxes. All right, is everybody still with me? Everybody's quiet. But if you're still with me, I'm going to continue. Another thing to mention, which it wouldn't affect us typically unless we have a business where we're importing items. Tariffs imposed. That's another thing that's being mentioned. Nothing for the Harris administration, but tariffs for imported goods. The Harris administration has nothing. The Trump administration is saying between 10 and 20% on most imported goods, and then 60% imposed on items coming from China, right? So that's what the Trump administration has. And just to give you a little bit more information, currently the tariffs on various imported goods is around 25% on steel, and like aluminum, it would be 10%, right? So um if that would, so he's proposing 10 to 20% on most, and then 60% on, everything from China. Nothing for the Harris administration. Sorry about that. And then another notable mention is the earned income credit. It's not stated on here. The earned income credit is usually for lower income persons, taxpayers. The Harris administration is proposing that it goes back to what it was in 2021, where persons with no dependents were seeing a refund, right? Separate from the stimulus check, they were seeing a little bit more or lower tax liability or a refund. And that's because the earned income credit was increased for single individuals with no dependents. And that's a proposal from the Harris administration. Something that's not on here and that is not tax related is the proposal of housing assistance, where a $25,000 housing, first-time home buyer housing assistance is being proposed by the Harris administration. There's nothing on the side for the Trump administration on that. And then to go a little bit further, for higher income individuals, let's say there's something called capital gains. If you are not familiar with capital gains, it's, for example, let's say you have a property, a rental property or your own personal property, and you decide to sell it. It is assets like those are subject to capital gains tax, right? Capital gains tax, she's projecting that it be increased to 28%, but specifically for taxpayers earning about $1 million annually. So if you fall into the $1 million tax bracket, you would be subject to a 28% capital gains tax. Another thing would be, and this would be affecting higher income earners, there's something called unrealized capital gains, right? So let's say I have a residential property. This is a tax strategy that some of my clients use. I have real estate. Let's say I buy a residential property. I'm like, okay, this it's not making as much as it wants, or maybe I want a different property. What I can do is there's a tax strategy where you can dispose of that property and replace it with another property, and you don't have to worry about the capital gains tax right away. That's called a 1031 exchange, right? And then you'll have unrealized capital gains. So those get suspended or paused until you finally get rid of the property that you replaced it with. So for taxpayers that are in the $100 million category, the Harris administration is proposing a 25% tax on the that tax strategy that the wealthy people use, where they don't have to pay tax, they'll hold off until they finally decide to get rid of the property, and then they'll have those funds to further invest in other things. But she's proposing that they pay taxes on that percentage of it, right? And then the next thing I wanted to mention is the Medicare and net investment income tax. And that's usually assessed for higher income earners. For married people is $250,000, and you pay an additional 3.8% on the amount that on a certain amount, right? So the Harris administration is proposing an additional 1.8% on that 3.8. So that's going to take that tax rate to 5%, right? In addition to like the regular taxes we pay, federal, state, all of that. So I'm going to just do a quick recap. We spoke about the Tax Cut and Jobs Act and the fact that a lot of things that we're benefiting from, standard deduction, the income tax brackets that are in there, the SALT caps, all of that is set to expire at the end of 2025. And basically what the Trump and Harris administration are proposing are going to affect that if Congress passes it. So more specifically, that would be blanketed for a lot of persons. It would affect a lot of persons. Overtime, no taxes on that. That's being promoted by the Trump administration or proposed. No tax on overtime, no tax on tip, no tax on Social Security benefits. And then the Harris administration, these are the notable mentions, is proposing a $6,000 credit for the first year of a child's life for child tax credit and $3,600 as opposed to where it's at, which is $2,000 for qualifying child. And then the Trump administration is proposing lowering of capital gains tax for persons who register corporations. So if you decide to register a corporation, it's a 21% flat rate tax. Trump is proposing lowering it to 21%, while the Harris administration is proposing increasing it by 7%. And of course, we spoke about the taxes that are going to be imposed on higher net worth individuals. Specifically, in the capital gains tax, it's going to affect a lot of persons in the real estate space that have much higher net worth. And it's also going to affect higher net worth individuals who fall into a certain category with the net investment income tax. All right. I did not want to make this too long because, there's a lot. It can be very confusing. So we are at the end. A little bit about my firm. We offer consulting, tax planning, bookkeeping, and IRS representation services, as well as business and real estate tax preparation services. And you can always reach out to us directly and block a time that works best for you. Let me know if you have any questions as we are toward the end of this recording. Any questions from anyone? I put in the chat a link to block a time with me. Let me go ahead and stop the recording.